It is Friday, August 23rd, 2019. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very victorious get your ass kicked at Jiu-Jitsu Friday. Went and took it a little easier today just because of the knee. But nonetheless, was quite victorious. I pulled off a kick-ass hip sweep. Like, I really relish when it happens, and probably a little more than I should. But it's one of those moves that if I'm quick enough about it, man, where you shift your hips over, you grab around there outside, and you just sweep them on over. And I managed to nail that one twice against two different people. So the gentleman that I was rolling with was a white belt in both cases, but nonetheless, it was just a neat thing to, it's like this person thought they were being a bully on me or something. I just reached across the hip and rolled them flat and managed to get it twice. So we're covering a little bit of sweep action today from the koala guard of all places to start off with. But we don't usually do koala guard, but I'm sure it's one of those things you definitely want in your arsenal. In the event that you do end up wrapped around somebody else's leg, you got to think about how to arrange their body so that you can take them down. And so that's kind of what we were working on today. The second one, I don't know why I had so much trouble with it. I think it was because I didn't catch when the instructor had said which lapel to grab. Because when I was working with my partner, it's this weird thing where, like, you've got a koala grip and they reach down to try and disengage your leg. And then you reach across and grab their outside arm and bring that and feed it to the arm that you got wrapped around their leg. And then from there, you're supposed to grab the same side lapel and break their posture to where you can really get that hand around the outside of their leg. Then you disengage that lapel, post on that hand, get up to a standing position and do a single leg sweep where you've got the leg still draped over their own arm, and you just do a nice little sweep, nice little single leg sweep, put them right on their ass, and keep yourself on the outside, assume the side control. It's all good, right? Well, I kept fucking up on it. I kept reaching over and grabbing the opposite side lapel. And so when it came time for me to be coming up, I wasn't disengaging. I was supposed to disengage that hand anyway after I had broken my opponent's posture. Although thinking about it now, I would think that breaking my opponent's posture and getting the arm as far as possible all the way around, that grabbing the opposite side lapel was probably the right thing to do anyway. But I don't know. There were a couple little tweaks that I did on it to get it to work with the way that I was doing it, and I don't know. I'm thinking about it now, and there's probably some other movements I could have done, but after breaking my opponent's posture down like that, that there were a couple other leg movements I could have done to initiate the sweep. One of which I think, if I still had the grip on the outside lapel, simply rolling over to my left, I think would possibly bring my opponent down. It depends on how far under them I was. But yeah, so it was very, very productive. I pulled some kind of sick shit today, and I felt really good about it. But I did try not to completely destroy my opponent's confidence in what they were doing. If they were pushing along a really good vein, I kind of let them explore it a little bit. Not put as much pressure on it. but just enough, not so much that they felt like I was giving it to them, though. You know, I kept putting up resistance, I kept avoiding grips, you know, those kind of things. But at the same time, I want them to be able to explore it too. I mean, it's, you know, jiu-jitsu, I think, is the funnest when it's a dialogue, and that, you know, when it's you know, a discussion. You know, rather than somebody dictating over the top and saying, do it this way, I'm going here, I'm doing this. I mean, there's a time and a place for your dominance and asserting your authority and your will and whatnot, but at the same time, you know, you're there not only to learn for yourself, but also help other people along. And so, like, I almost got this guy twice with different stuff. I almost got him with a choke, and then I was working him around to get back to a choking position, and he negated it right at the end. But, you know, there again, I could have put more pressure on it. I could have exerted my will a little more, asserted my will a little more. But at the same time, I don't think it would have been as fun. And that's another thing, is that by pausing a little bit and exploring the situation myself and giving them the opportunity to do it, it gave me new situations to react to. You know, it's because no matter how much you think you know about what your opponent is going to do, they're free to do whatever the fuck they're going to do. And, you know, if you're not enough in their head, they're going to do something that you don't expect. You know, and so, like I said, I tried to disengage control. You know, it's like there was 1 or 2 points when I had him in closed guard, and it's like, you know, closed guard is cool, but there's only so much I can do from it, so I'm going to go ahead and disengage and start moving around toward a sweeping position, maybe, or, you know, some way to get him down and pass his guard, you know. So, like I said, I felt like that was the better situation to do, rather than, again, being really, really dictatorial about it and just being rough. Anyway, let's go ahead and throw down into some music. And I laid off of Bloodlust last time around, but I think we can get into it this time. Here it is. Ski Mask Way, First Dance, here on Coin Metal. And that was Voivod with I Conspiracy. Yeah. And so, what we got up first here is, I just found this one relatively recently. But I find it very humorous, considering the amount of clamoring there is for quote-unquote regulatory clarity from some of the legacy people in cryptocurrency, involving themselves in cryptocurrency. Personally, I believe that such calls are basically saying, hey, yo, I want you to implement these rules so that we know how we can cheat. You know, we can figure out which way to game the system in our favor. Not necessarily, you know, making it good or safe for anybody, but just figuring out a way to be able to send the signals back to the Fed. Hey, everything is cool, everything is wonderful, until it is absolutely impossible to maintain that impression given the other signals that are emanating from your company. And so anyway, I got this article here. It's on CNBC.com, and this is by Don Giel. My apologies. Let me make a minor adjustment here. Another ex-JP Morgan precious metal trader pleads guilty to spoofing, is cooperating with feds. And again, this is by Don Giel. So no penis. This is authored Tuesday, August 20th, 2019 at 3:56 p.m. EDT. Scrolling down here. Another former JP Morgan precious metal trader pled guilty Tuesday to criminal charges of manipulating the precious metal markets for 9 years, making the latest in the Justice Department's crackdown in the commodities markets. Christian Troons, 34, of London, is cooperating with an ongoing federal criminal investigation, the Justice Department said. He pled guilty to 1 count of conspiracy and 1 count of spoofing in the U.S. District Court in Berlin. Spoofing is a strategy that involves placing trade orders with the intent to cancel them before they can be executed. The goal is to affect the price of the commodity and benefit a pre-existing trading position. In his guilty plea, Troons admitted that from approximately July 2007 and August 2016, he, quote, placed thousands of orders that he did not intend to execute for gold, silver, platinum, and palladium futures contracts, according to officials. Oh, no wonder they keep wanting to get those on Bitcoin, so they can fucking spoof the market. Troons, who earlier resigned from his position as an executive director at JP Morgan, said, quote, he learned to spoof from more senior traders and spoofed with the knowledge and consent of his supervisors, according to the Department of Justice. JP Morgan declined to comment. I wonder why. The Justice Department is conducting multiple criminal investigations into big banks with the cooperation of traders who have pled guilty to spoofing-related crimes. In the past 5 years, federal prosecutors have brought a total of 12 spoofing cases against 16 defendants. Troon's guilty plea marks the second former JP Morgan precious metal trader to admit to spoofing in the past 10 months. John Edmonds, 37, pled guilty in October in Connecticut federal court to working with other, quote, unnamed co-conspirators to manipulate the prices of gold, silver, platinum, and palladium futures contracts between 2009 and 2015 while employed at JP Morgan. Edmonds, like Troons, admitted learning the illegal trading tactics from senior traders at the bank to using those tactics with the knowledge and consent of supervisors. Edmonds, who has yet to be sentenced in his criminal case, and several other traders who likewise have pled guilty to listen to this. Don, this is the wrong tense of pled. Pleaded. Give me a break, girl. Likewise have pleaded guilty? No, have pled guilty to spoofing-related crimes, are also cooperating with federal prosecutors in ongoing probes of major banks. Troon's sentencing is scheduled for February 19th, 2020. Last February, JP Morgan first mentioned the legal actions in a financial disclosure. Quote, various authorities, including the Department of Justice's Criminal Division, are conducting investigations relating to trading practices in the precious metals markets and related conduct. The firm is responding to and cooperating with these investigations. Yeah, pretty much you do not have a choice. Got a hand halfway up there, up your ass. You're going to do what they tell you to do. But it's pretty evident, at least by the tense of this article. And I know CNBC does have their own flavor of spin, so you got to wonder how much is it of this article is really that spin. But anyway. This kind of is indicative of a systemic thing. Again, the whole regulatory apparatus, from what I can discern and what I've observed, basically is the Fed sets up a set of rules, whether it's based on advisement from private individuals or lobbyists or whatever, I don't know. But they make up rules, right? And then the companies such as JP Morgan or Goldman Sachs or whatever, they use those rules as a way to figure out how to structure their market behavior and whatnot to where they're giving off all the signals of one thing, but taking advantage of the fact that it is not absolutely true. So say the precious metals trading, where they're loading up the order book, saying, "Oh yeah, we're gonna buy $9 billion worth of fucking silver futures," and then at the last minute, you know what? We're gonna go ahead and cancel that order. That has dramatic effects on the books, and it has dramatic effects on the way that people trade, because they use the books as indicators, as they rightly should be able to. But this is a matter of a systemic effort to suppress the prices, or at least manipulate the prices of actual physical commodities. There's no telling how many billions of people this bullshit actually impacted, all the way down to the miners. Those motherfuckers go out there in the roughest of conditions, because that's where the best gold and silver and whatnot is. And they beat the rocks and they suck the ores and they do all of that. And they're trusting that the price that they're able to acquire on the market is a fair price for what they're selling. But in the background, you've got these guys, and an ongoing federal investigation means that, to me at least, they're buying time. That's all they're doing. They're just buying time to rinse the executives out that were involved in this shit. And by the time the Justice Department gets to them, they'll either be, private individuals, which means they'll be easier to take down, or they'll be retired in other ways. Kind of a suicide by shotgun behind the head, that kind of thing, Assisted suicide. Some would call it murder. Anyway, point being that they have to liquidate the paper trail at this point, and they're kind of given time by the criminal investigation ongoing. But to me, it just reeks that there's probably representatives or whatnot that are directly tied to this shit, had full knowledge of it, were on the take for it. But we're not going to know any of that. We're going to get a fall guy here or there, Mr. Troons in this case. And the other guy, there was another guy in here that, where is it? John Edmonds. Yeah, you get these fall guys, but, they described that they had co-conspirators. They described that their supervisors knew everything that they were doing. So again, this is company policy. This is like, when you get hired at a place like this, they give you a little booklet and they say, this is how you want it. We want you to trade. We want you to set up a bunch of fictitious bullshit trades. We'll give you the collateral for it. Everything on that end is good, but these are the kinds of ways that we want you to trade. And, I mean, at least that's the impression that I'm getting from this. That, again, this is like official policy. We spoof trades. we spoof the books to manipulate the markets in our favor. But, it's like, here's the thing. To me, this is like expecting professional athletes not to use steroids. You're in a competitive sport against people that are at least your size, if not slightly bigger, and you have to be on par with them. You have to use steroids. You have to use every fucking advantage you have to your advantage. And in this sense, I have absolutely no animus against JP Morgan. Hey man, if you've got the fucking liquidity to flip it around and flex it, do that shit. But let's give up this fantasy that because the SEC exists and the CFTC exists and the FBI exists, that they can have any real control over the actions of an entity like JP Morgan. And again, JP Morgan, they're just like a fucking professional athlete in professional sports. They are going to use every single advantage to their advantage. So rather than expecting that the other people that you're trading against aren't on fucking steroids, let's come to the market with the acknowledgement, goddamn, the anticipation that every other motherfucker around you is using steroids. It's an assumption you can just go with. So we can just get rid of all the fucking USADA and all that other bullshit and all these things that give us these false impressions of safety. That we got a mommy and daddy that are looking out for us, and the frameworks and the apparatuses that they are providing for us are going to be suitable, are going to actually give us redress and resolution in the event that one of these entities decides to fuck us over. And it doesn't fucking exist. I mean, again, the shit these guys are doing is affecting billions of people. Okay, but they can never hope to pay back for that, They can never account for the millions and millions of ounces of gold that were mispriced, and the ways that impacted the economies, that those funds were, those volumes of gold, that they were dependent on that. Like Venezuela or Colombia. I'm sure it kills them to not be able to sell their gold higher than like $1,500-$1,600 an ounce. And they've got reserves of it. Clearly they do, because they've got the goddamn, the petro, and that's supposedly valuated against actual volumes of things that they have, such as gold, silver, diamonds, oil, so on and so forth. Now, of course, they could be spoofing volumes of that, and then they're even more fucked than we'd originally thought. But nonetheless, these kind of manipulations, again, they don't impact just JP Morgan. They don't just benefit JP Morgan. They hurt everybody else. And of course, for every winner there has to be some losers. But again, let us not operate under the assumption that the players around us aren't roided to the fucking gills. They are. So don't play their game. That's how to win. Look at the longer term. Consider developments in the market, and consider how that might impact development streams. How things will develop. For my money, that's why I like privacy-related cryptocurrencies, because I envision a time when the simple protections of AML KYC are going to introduce all kinds of security holes to all of our lives. And so the less data on you that's associated with your transactions, the better. Again, we're operating in an environment where everybody else is operating to their advantage, using every bit of knowledge and every means they have available to them to their advantage. You must assume this. And I think that in the longer term, that's one of the things that's going to cause people to get realistic about cryptocurrencies. Not just the ones that exist today, but potential ones that replace them. I think this is one of the aspects of cryptocurrencies that I think is really underappreciated, is that, the ones that exist right now didn't always exist. Bitcoin came before all of them. However, there's been nothing in this space so far that has been absolutely permanent. There have been several coins, thousands of coin projects. That they had developers, they had communities, they had miners, they were traded on exchanges. They are no longer here. And so again, the ones that are currently on the market, they may not be here tomorrow. And you have to operate under that assumption as well. It's like, do they have a vibrant economy or community of people that are using it? And I think that's not just going to impact today, though. Not just today's use. I'm sure there are a multitude of coins out there right now that when people do have to get really serious about cryptocurrencies and whether or not to use them and which ones to use, that by the time we actually get to there, if they're still live, if they still have a network, people are going to be evaluating them again and going, oh, well, this one has a really fast time on it. There's plenty of support for it. It's been live this entire time. They have their own individual wallets. They've been establishing partnerships with people. They're obviously in it to continue being in it. They don't have any intent to just whisk away into the night and leave you fucking hanging. And so again, those are the kinds of things that people are going to be taking into account. And it's not, you're not going to be safe no matter how big or small you are. I think at one point or another, Coinbase's activities and the way that they've conducted themselves may be drawn into question. That according to new standards, they could be looked at as like extortionists whatever because of the extraordinary fees they charge on transactions, cash withdrawals at least. That those are the kind of metrics that, when we get serious about this shit, you're going to be looking back on it and you say, wait a minute, that transaction only cost you about 10 cents, but yet you charged your client here $15 on that same transaction. Yeah, there's no amount of regulatory scrutiny or record keeping or anything like that would justify that kind of expansion, that kind of inflation of the cost extended to your clients. And I think the entire economy is going through the real effects of the U.S. dollar being printed and distributed and so on and so forth. A lot of inflation, actual inflation going on. But I think that a lot of things are being used as mismarkers of it. So like you've got several events going on right now that would supposedly be the catalysts that heavily impact the market. So things like a trade war between the U.S. and China. Personally, I don't think that exists. I think what's going on right now is that there's been a lot of government borrowing, and the rest of the world's kind of noticing this, that we're going heavier and heavier into debt, and we're printing more and more money, and they're saying, look, we want to take U.S. dollars, but this price that you're offering is way too low because of how many more U.S. dollars you're printing and issuing. So, we want more. And then Trump gets up there and goes, trade war with China. And everybody buys that the increase in price that they're experiencing on the shelf is because of what's going on. No. What's going on is fair and equitable commerce costing more. That's it. And it's because the medium of exchange itself is being debased. That's in my opinion, that's what's really going on. And we bluster. There's all kinds of bluster in the media about trade war with China and how that's going to impact us. Yeah, whatever. You know what? We've been on a import decline. We've been buying less and less from China for probably the last, I want to say, decade or so. That our imports from there have been going down. As a matter of fact, there's been such a significant drop in the amount of materials that we've been shipping in from China. There are literally flotillas of shipping container ships out there off the coast of China because they can't scrap them necessarily because there might be a spike in demand or something, and they got to be able to mobilize for that. But they have so many more of these shipping container ships than they actually need. They've been refitting them for other purposes. They've been turning them into fishing craft and shit like that. These to me are signs of a different kind of slowdown, where there's actually less demand for stuff from China because, number one, we can't afford this shit. Really, I don't know anybody that can just, well, I take that back. I know a couple people that could afford to just fork over $1,000 out of their pocket for a new Apple iPhone. But that's increasingly further and further out of the reach of the average person, and that's because the dollar itself is being weakened by Fed action. But again, we get that additional cost mislabeled to us. Oh yeah, this is because of the trade war with China. No. China wants what their shit is actually worth, and you're trying to give them devaluating dollars for it. Yeah, I think if it was valuated in Bitcoin, it would be appreciating in price, at least by experience on the US dollar. But I got a little bit of a shifting gears that I want to go to, and I think I'll save this until after the music break. And so where to go next for music? That's the question. And I don't know, I think maybe a little 12-Foot Ninja here. And as far as what song though? One Hand Killing here on Coin Metal. And that was the Melvins with Revolve. And so, I got this thing on BitcoinWarrior.net. Just came across it during the music break. I think this one's kind of pertinent. Flash crashes on BitMEX plunge Bitcoin price to $1. This is authored 8/24/2019. No indication of the actual author, but whoever they are, apparently they are a time traveler. Cryptocurrencies are quite famous for their fluctuating price and the occurrence of flash crashes. Due to this high volatility, many margin traders try to take benefit from it. To assist them, certain exchanges allow the use of leverages of up to 100 times. This means that any price volatility, whether a gain or a loss, are amplified 100 times and thus can cause a disaster or make someone wealthy in a short time. However, last night a strange phenomenon occurred on the BitMEX exchange that offers leverage up to 100 times. The exchange bore witness to a series of flash crashes and flash pumps across various cryptocurrencies on the platform. The worst flash crash affected Ethereum, the price of which was reduced to a mere 33 cents. On the other hand, EOS had the highest flash pump, with the price spiking over $100. Moreover, people were able to buy Bitcoin for $1 on the USDC pair, while Litecoin was also affected. While these users had hit a jackpot, people on the other side had sold an asset worth over $10,000 for just $1. This meant that all margin traders were completely annihilated in this series of flash crashes. Although some people believe that this is the outcome you get when using shortcuts such as leverage to gain profits, this is still not normal for any cryptocurrency exchange. Furthermore, this cannot be said to be an error by the traders. Quote, leverage trading is the title given to using borrowed money in order to increase the potential return of investments and hence amplifies profits as well as losses. Combined with the 20% fluctuation of cryptocurrency prices, this can be highly catastrophic or lead to sheer gains of wealth. Regardless, in such flash crashes of platform instabilities, a trader can do almost nothing to stop his losses. BitMEX is not the only company facing problems with its platform, and it is joined by Binance Exchange. Binance Exchange was facing certain issues with its amazing Amazon Web Services, AWS. It was revealed to the public through a tweet by their CEO Changpeng Zhao. The issue occurred with caching services and it rooted from an outage with their cloud solutions. Yeah. Wait a minute here. That is weird. So, apparently, I guess it just affected USDC pairings on there. So I gotta wonder if maybe it wasn't an event on the side of USDC, because USDC isn't actually a dollar. It's I consider it to be counterfeit dollars myself, but some people think that because Goldman Sachs owns Circle and Circle issues it, that they're somehow going to be safe. And as we talked about with regard to JP Morgan, there is no safety. Just because it's regulated doesn't mean it's safe. Anyway, got this next one up here. This one's on CoinDesk. And wait a minute. I want to check something else really quick here. Maybe that one. Yeah, this one. This one sounds good. This one's on CryptoGlobe.com. And it's by Michael Levere. So yes, penis. And this is authored on August 24th, 2019. So apparently Michael is a time traveler as well. Lots of time traveling dicks. Winklevoss twins. Wall Street has been, quote, asleep at the wheel regarding Bitcoin. Sleeping on Bitcoin. Oh, wait a minute. Cameron and Tyler Winklevoss, who founded the cryptocurrency exchange Gemini, said that Wall Street has been, quote, asleep at the wheel in regards to Bitcoin in their most recent interview. Speaking with CNN Business on August 22nd, the Winklevoss twins explained the value of Bitcoin as an investment while giving their opinion on the risks of the cryptocurrency industry in comparison to the traditional financial sector. They were also critical of the established market's slow acceptance of Bitcoin and crypto assets, claiming that Wall Street has fallen behind in that regard. Tyler Winklevoss argued that, quote, retail investors have had the edge of institutions in the market of crypto through their willingness to explore the new asset class. He continued, quote, unlike the internet, which you couldn't buy a piece of, you can actually buy a piece of this new internet, this new internet of money. It is still a retail-driven market from day one, and a lot of people have done really well. Wall Street has been asleep at the wheel. In addition, the twins claimed not to be deterred by the high price volatility of Bitcoin and said the risk of missing out was much more compelling. Quote, we had to invest because we were afraid of missing out. We couldn't miss out on this future. The twins also compared Bitcoin to gold, which is becoming a more common financial analogy as investors and analysts view Bitcoin as a digital store of value. Yeah. I think that where Bitcoin is going to suffer is going to be when its actual performance fails to meet the expectations of new users. And this has been a cascading thing, where people come into cryptocurrencies, they come in on Bitcoin, and they try to use Bitcoin, and they find out that they're having to pay really, really high fees, and the only way to use it cheaply would be to use it off-chain, and that introduces all kinds of additional costs. And so when they're looking at it, they're like, okay, well, wait a minute now. I can keep my money in Bitcoin on Coinbase, or I can withdraw it as, say, Litecoin or Ethereum or Bitcoin Cash, and transition it out of Coinbase relatively cheaply to another exchange that will give me a better rate on the exchange between it and US dollars or other cryptocurrencies. That it's simple enough to do, but I mean, like when you're looking at the cost differential between trying to run a Lightning node and doing the exchange that way, versus simply moving it over to an exchange. Yeah, you're going to pay a transaction or a minor fee rather for it, but the fees associated with transitioning it in the crypto form over to another exchange is a lot, or even a wallet that will allow you to spend it as money. It's cheaper than keeping it on a Lightning node. Just in electricity costs alone, keeping your node live. I think that moving it over to Dash or Monero or any number of other cryptocurrencies that you have vendors that are willing to accept as cash, that you're able to transition from peer to peer and do that with them. Dude, why wouldn't you? You know, this is supposed to be on your own self-interest here. You know, so keeping it in the form of Bitcoin just to make somebody else happy is not a good enough excuse anymore. As if it ever was. Anyway, speaking of stable coins, I got this other article here. It's on Cointelegraph. This one's by Jack Martin, so yes, penis. Research suggests Tether sentiment could provide chance for manipulation. New research from Augmento suggests a forward correlation between Tether sentiment, market capitalization, and price, which could be manipulated or exploited to create arbitrage opportunities. I'm sure Tether abuses that. What are you talking about? It hypothesizes that Tether sentiment could therefore provide a signal for traders in a blog post published on August 22nd, which we're going to go ahead and click on. Sentiment correlation with market cap. Augmento suggests that Tether sentiment does not appear normal. Comparing positive and negative sentiment shows that negative sentiment dominates, with extreme spikes of intense discussion when news breaks before dropping quickly away. When considering this alongside changes in market cap and price, it found a foreshadowing effect. A move in market cap accompanied by a spike in sentiment was likely to predict a further market cap move within 8 to 12 days. Manipulating sentiment for gain. Sentiment spikes were often found to occur either before or at the time of price drops. Market cap rises are often followed by FUD, fear, uncertainty, and doubt, on social media, potentially causing a decrease in price. This leads to the possibility of deliberately spreading FUD to buy USDT with a discount when the price falls and resell it when the price normalizes. If allegations that Tether manipulates Bitcoin via its market cap are true, then being able to predict Tether's market cap moves by measuring sentiment would be a useful signal. As reported, Tether has plans to introduce a Chinese yuan-pegged stablecoin. The token would reportedly be backed by yuan held in offshore accounts under the CNHT ticker. Yeah. So, I've said multiple times now that I believe that Tether is used specifically to manipulate the price of Bitcoin and other cryptocurrencies downward. You know, and it's not very difficult to follow along with that idea. You know, especially considering that for Tether, the Tether are relatively free. I mean, supposedly they have to do some sort of transaction on the Omni layer or something like that in order to facilitate the production of new Tether, but I'm not exactly sure how that relationship works. And in all honesty, I shouldn't be placed in that position of needing to trust that Tether actually has some sort of reserves in as collateral for the USDT that they're issuing. You know, this whole thing was not meant so I needed to trust anybody specifically. You know. Anyway, Got this next one here, and it's on Bloomberg. This one's by Brian Swint. So yes, penis. Carney urges Libra-like reserve currency to end dollar dominance. That's interesting. This is authored on August 23rd, 2019 at 12 p.m. PDT. Mark Carney laid out a radical proposal for an overhaul of the global financial system that would eventually replace the dollar as a reserve currency with a Libra-like virtual one. Just a few months before he steps down as Bank of England governor, Carney offered his vision for the international economy at a time of sweeping change. Trade wars and the threat of currency wars are hurting growth and upending multilateral cooperation, while central banks are trapped in a low-interest rate world as they struggle to revive inflation. Quote, "The combination of heightened economic policy uncertainty, outright protectionism, and concerns that further negative shocks could not be adequately offset because of limited policy space are exacerbating the disinflationary bias of the global economy," Carney said. Quote, What then must be done? Speaking to fellow policymakers and academics at the U.S. Federal Reserve's annual symposium in Jackson Hole, Wyoming, he said that in the short term, central banks must deal with the situation as it is. But he also warns that the, quote, that blithe acceptance of the status quo is misguided and dramatic steps will ultimately be needed. His most striking point was that the dollar's position as the world's reserve currency must end, and that for some form of global digital currency, similar to Facebook Inc.'s proposed Libra, would be a better option. This would be preferable to allowing the dollar's reserve status to be replaced by another national currency such as China's renminbi. U.S. shocks. He spoke hours after U.S. President Donald Trump roiled financial markets again by using Twitter to criticize Fed policy and tweeting that he would respond to retaliatory tariffs on American goods imposed by China. In the longer term, we need to change the game, Carney said. Quote, "When change comes, it shouldn't be to swap one currency hegemon for another." Yeah, you know what? I believe that's the case, that there won't actually be an exchange of one hegemon for another. Hold on one moment. I got to make an adjustment here. Libra is planned to be a worldwide digital currency that could lie outside the direct control of central banks. So far, it has drawn opprobrium from most policymakers. French Finance Minister Bruno Le Maire said it is, quote, "out of the question," and U.S. House Financial Services Committee Chair Maxine Waters proposed an aggressive response from Congress. Carney has been more sympathetic, though. In his speech, he said it may be that a new, quote, "synthetic hegemonic currency would be best provided by the public sector through a network of central bank digital currencies. Quote, "Even if the initial variants of the idea prove wanting, the concept is intriguing," he said. An SHC could dampen the domineering influence of the U.S. dollar on global trade. Carney's chief concern is that globalization has heightened spillovers, and financial integration means crises can spread rapidly. That results in U.S. monetary policy having a greater impact on other nations than it used to. A multipolar system would reduce those spillovers and help minimize the volatility of capital flows to emerging markets. The, quote, "mainstream view of monetary policy and the international financial system is, quote, increasingly anachronistic," the BOE chief declared. Quote, even a passing acquaintance with monetary history suggests that this center won't hold. Let's end the malign effect of international monetary and financial system and build a system worthy of the diverse, multipolar global economy that is emerging. Yeah, I think that the multipolar global economy is going to be much different than even this gentleman believes. That Mr. Carney is probably going to be thrown on his ass with how quickly the economy does change and what exactly will be important in it. I think that the idea of going to Libra as a reserve currency is just fucking silly. For one thing, I don't believe that it can actually do all of the things and be all of the things that they have claimed that it can be and can do and will be. If you want some background on my real opinion on the whole commodity associated cryptocurrency, look it up on my YouTube channel. I did an episode called commodity backed cryptocurrencies, the triple layer mystery cake of cryptocurrencies, or something to that effect. But basically, it breaks down to, you don't know how many US dollars are in the market, but that's the valuating metric, right? So you can't really associate a cryptocurrency directly with the US dollar because, again, you don't know what the actual proportion of them there are out there. You need to be able to back it 1-to-1, right? And if you can't do that, you can't really do that if you don't know how many there are out there. Anyway, if you're evaluating things like gold and silver and whatnot in US dollars, and the US dollar itself could be a manipulation point on the actual value of gold and silver in it, right? So those are 2 points that are basically big question marks. You might know how much Bitcoin there are, but you can't tie Bitcoin to gold because, number one, you don't know how much gold there is out there. You don't know how quickly it comes to the market. Its actual market movement is deliberately and coincidentally manipulated on the US dollar / gold exchange rate. There's several manipulation points in the market itself. We just read an article about JP Morgan manipulating the fucking price of gold since 2007 to 2016 as a part of their policy. So again, if you're trying to take a cryptocurrency and peg it to the value of shit that is hyper manipulated and is itself a manipulation point, you're going to have no choice but to share in the manipulation. And that could work to your benefit at some points, but oftentimes it's going to work to your detriment. And the detriment of your clients, the people that are actually using your cryptocurrency, that is supposedly bound to gold or bound to silver or some basket of the same or basket of fiat currencies. Yeah, whatever. The point of the matter is that it can't be done. And there are several people that have said that it can be done. Matter of fact, we've been hearing it since about, I want to say 2013, 2014. The idea of quote unquote stable coins is not new. All of the ones before Tether failed. And I would argue the only reason that Tether exists now is because it's actually it's a proxy of the central banks. That's just my feeling, though. I could be wrong on that. But they're the only people that can go to the market and say, yeah, we're good for it. And the market takes that on faith. And the market accepts that on faith with regard to Tether, too. Oh, we're good for it. Everything's cool. We got the reserves 1-to-1. No problem. We do a little study and we find out that's not true. That they've got collateral on their books that they're counting as actual cash reserves, and there's no guarantee that those will actually the collateral itself is actually worth what they say it is, or that they'll ever get what they say it's worth. Anyway, let's go ahead and throw back down into some music. And I've been dying to play some dope, and so here it is, Survive, here on Coin Metal. And that was Strapping Young Lad with All Hail the New Flesh. And so, next up, I wanted to follow that Augmento article up a little bit further. And so here it is. It's on augmento.ai. This is Traces of Manipulation, How the Mind of the Market Predicts Tether and Vice Versa. This is authored on August 22nd, 2019. No credit given to the author. Alright, anyway. Tether is a risk to the crypto ecosystem. A growing number of voices subscribe to this, especially allegations of manipulating Bitcoin prices by artificially increasing Tether's market cap when, quote, Bitcoin is falling, is a concern. But to date, the full picture of Tether's inner workings remains unclear. Starting from the assumption that Tether's market cap matters to Bitcoin, we set out to analyze whether we can leverage sentiment to predict Tether's market cap. The findings show that there is an increase in sentiment activity 12 to 8 days before market cap shifts. Moreover, the findings establish data for the possibility of sentiment manipulation by either Tether or other insiders aiming at profiting from, quote, undervalued USDT. Methodology. First of all, we evaluated which of the social media communities talks about Tether the most. After comparing crypto sentiment data from Twitter, Reddit, and Bitcoin Talk, it shows that in relative terms, it is the Reddit community, which is why we used its sentiment data for further analysis. We used data from the last 22 months, September 1st, 2017 to July 30th, 2019. All sentiment data quantifying 93 emotions and topics of discussion are retrieved from the Augmento API. Number 1. When, how much, and dominated by which sentiment does the community talk about Tether? To answer the first research question, we analyzed which news broke at what time in Tether's history and whether they caused sentiment spikes. When we then identified dominating sentiments. To provide more context, we built plots of Tether sentiment, Tether market cap, Tether price, and Bitcoin price. Number 2. Can we leverage sentiment data to predict shifts in Tether's market cap? To answer the second question, we computed the correlation of the market cap absolute differential with Tether sentiments for time lags ranging from minus 24 to plus 24 days before/after Tether market cap moves. The reason why we chose market cap's absolute differential is that it represents both down and upward market cap moves. In the measured time frame, there were 188 out of a total of 667 days where the market cap shifted more than 5% within a week. The strongest weekly shift took place between January 28th, 2018, where Tether market cap surged by 39.42%. In total, the market cap rose by 822.06%. In a further step, the same analysis was applied to Tether sentiment and prices, daily low. Tether sentiment does not seem normal. Comparing positive and negative sentiment shows that negative sentiment clearly dominates the online discourse. The extreme spikes in sentiment show how intensively the community talks about Tether when there is news. However, after the story breaks, interest drops fast. It seems as if the community is over and over again surprised by bad news about Tether. Comparing this to Bitcoin negative sentiment, we see that Bitcoin sentiment is much less spiky. As compared to other coins, such as IOTA and Stellar, Tether shows much more extreme sentiment spikes. These are headlines from articles that relate to Tether negative sentiment. Let's see, on November 21st, 2017, Tether claims $30 million in US dollar tokens stolen. January 16th, 2018, Tether now prints $100 million worth daily since January 16th. Let's see, January 31st, 2018, CFTC sends subpoena to Bitfinex and Tether. July 13th, 2018, June 13th, 2018, Bitcoin is slipping after a study found signs its 2017 bull run was driven by market manipulation. Let's see, October 15th, 2018, price of stable cryptocurrency Tether tanks to 18-month low. April 26, 2019, Bitfinex allegedly covers $850 million loss with Tether funds. And June 26, 2019, Bitcoin BTC rally is fueled by Tether. A timeline of negative sentiment peaks, labeled with the article headlines discussed by the community at these times. Whether or not these sentiment spikes are natural occurrences or intended results by market participants is not possible to determine at the moment. Why this would be a key insight, however, we learn in the second part of this analysis. Predicting shifts in Tether's market cap. The result from the described methodology, number 2, is a correlation matrix. It shows to which degree Tether sentiments/topics from Reddit correlate with Tether market cap. The time lag ranges from negative 24 to plus 24 days. For example, a relatively bright value at X equals minus 12 means that the sentiment/topic correlates relatively strong with the Tether market cap movement 12 days before the market cap movement actually takes place. First of all, we find a very bright vertical lagging correlation zone at X value plus 2. That means that 2 days after the Tether market cap moves, the people debate most intensively about Tether. Here, 2 fields catch our eye: regulation/politics and FUD_theme. The former measures how often people mention regulatory and political topics in relation to Tether, while the latter measures how much talk includes FUD. Relatively strong correlations between Tether's market cap and these sentiments make sense in the context that attorneys are on Tether's tail, that Tether has issues with regulators, and that the community might react with FUD to shifts in Tether market cap. Plotting regulation/politics and FUD_theme with Tether market cap over time axis. And they give us a nice little chart here. Coming back to the correlation matrix, what draws our attention most is that there is an entire bright vertical correlation field forming at around 12 days before the market cap breaks out. The reason why this foreshadowing effect appears in our sentiment data might be linked to the correlation of market cap with itself, the last row in the correlation matrix. Here, we find a brighter correlation square 12 days before market cap moves. We find a similar correlation 12 days after the market cap is moved, but it is weaker. A hypothesis emerging from this: if the market cap moves today and is accompanied by a rise in sentiment/topics of discussion related to Tether, the chance increases that Tether's market cap moves again between 12 to 8 days from now. We guess that the 12-day foreshadowing effect might be linked to the inner workings of Tether. For example, there might be a connection to the mechanism that Tether prints USDT before actually releasing them. If allegations that Tether manipulates Bitcoin via its market cap are true, then being able to predict Tether market cap via sentiment could prove to be useful. However, the data inspires more ways to think about this sentiment effect, namely as a controlled tactic with a lucrative strategy. Tether sentiment manipulation. How could one profit from deliberately increasing sentiment activity before shifts in market cap take place? Let's look at total sentiment equals a sum of all sentiment activity. Tether market cap and Tether price, daily low, play out together. And let's see here. There is a minor correlation I see in some dips and some spikes. Sentiment spikes often occur either before or at the time when Tether price drops. We know that when Tether market cap rises, FUD spreads on social media, possibly leading to a decrease in the price USDT/USD. There's reason to believe that Tether has used fake accounts before to influence the online discourse. Let's assume Tether has accounts on Reddit with which they can increase the sentiment activity. This opened doors to many different types of manipulation. Actually, just one additional thing, if it's not already covered here, it could also be used to explain market sentiment retroactively, meaning that they could be putting out the signals beforehand in anticipation of their own manipulative movements, so that in retrospect, when people look back at the sentiment, they can say, oh, look, there was a dip in sentiment, so there's a dip in valuation, everything is normal. See how that works? This opened doors to many different types of manipulation. Number one, for example, the easiest manipulation is to spread FUD by USDT with a discount after the price falls, and later sell it for $1 when the price normalizes. Number two, assuming that Tether knows that some big player wants to buy big amounts of USDT, Tether can either offer an option to issue new tokens to an investor, or just get USDT over the counter at a fixed price with a small discount. Suppose the latter option is chosen. Since large bank transfers may require a few days to proceed, the time gap is introduced. Tether might spread the FUD to manipulate the price, buy USDT from the market with a discount, and then sell USDT over the counter to an investor without affecting the market price. Interestingly, the actor might not be Tether itself, but some other big OTC trader. Well, like Goldman Sachs, maybe? In fact, correlating Tether sentiment with Tether daily low prices shows that spikes in sentiment show strong forward correlations with falling Tether price. The correlations increase until the day the price drops. However, in order to prove such a conspiracy that Tether or other users knowingly manipulate the discourse with that intention, we would, amongst others, have to check if the sentiment spikes are driven by the same accounts. Caveats and further research. A caveat of this research is that we currently cannot explain the 12-day, quote, foreshadowing effect. For further research, it would be crucial to identify whether Tether sentiment spikes evolve naturally or as an intended result by market participants, as the research could scrutinize the reason behind the described effects and analyze whether a combination of market cap and sentiment signal could enable building a reliable Tether market cap and price predictor. Moreover, further research could analyze in more detail arbitrage possibilities emerging from the triad of increased sentiment activity, change in Tether market cap, and change in Tether price. Finally, we invite other researchers to use Augmento sentiment data to enrich their own analysis. We would like to thank Sam Aiken for helping with this research. Also, compared with other coins such as IOTA and Stellar, Tether shows much more extreme sentiment spikes. However, to better judge if such sentiment spikes are normal or not, we have to take into account that Tether is connected to Bitfinex, which is why reviewing sentiment data from posts mentioning exchanges would provide a fuller picture. Also, as a sense check, we applied the same analysis to sentiment data from Twitter and Bitcoin Talk. Here we find similar lagging sentiment fields after market cap shifts, but Reddit is the only community exhibiting the foreshadowing effect. To double check whether the plus or minus 12 days market cap correlation could be an artifact of the employed algorithms, we switch Tether sentiments for Bitcoin sentiments because there is no intuitive reason why Bitcoin sentiment should exhibit the same correlations as Tether sentiments do. Indeed, this test draws a much more random picture. Data collected from CoinMarketCap has rounding errors when price is bigger than $1 USD. Let's see. So yeah, that's pretty interesting. Like I said, I think they could be like seeding a bone field. Back a long time ago, there was a massive increase in the interest in archaeological digs, and specifically dinosaur bones. And so there was a lot of discovery going on, and because the whole genome and much of what dinosaurs looked like wasn't really known, and we still don't know it. I mean, all we really have is what scientists gather from what they're able to discern from the bones they find. But there was a period of time when there were a lot of archaeological hoaxes where guys would go out, they would bury a whole bunch of bones, and they would say, oh, look, I discovered a new Triceratops or some shit like that. And they would get themselves, written up in scientific journals and so on and so forth. Well, I think that what could be going on here is that they're actually seeding social media with data that could be used to explain a dip in price or a dip in sentiment. That they would be able to point back to Twitter and say, hey, look, it was all over Twitter, a week before this happened that such and such happened. And so, that explains the reason why the price dipped. And so, no, your criminal investigation into us is meritless, and you can go about your business. See how that works? Anyway, it is with that I'd like to close out the end of this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, I hadn't picked anything out, and so I'm just going to go ahead and throw this one down. It's a little bit short, but we're like that here, short and sweet. Soundgarden, drawing flies. Last dance here on Coin Metal. Thank you again for listening, and y'all have an excellent weekend. Good night.